Welcome to the Mortgage Mayhem podcast, where the mortgage game meets real life, real talk, and a whole lot of chaos. We break down the deals, the drama, and the data behind the scenes of real estate finance, with a twist of street smarts, savvy, and a touch of madness. Before we dive in, here's the deal. The Mortgage Mayhem podcast is for informational and entertainment purposes only. We are not attorneys, CPAs, or licensed financial advisors, and nothing you hear on this show should be taken as legal, financial, or investment advice. Always consult a licensed professional before making financial decisions.
Yes. We're back. It's Monday, April 21st. 2025. How was your weekend? Just happy to get back. A lot of stuff to talk about. So it's gonna be a packed show for you today. From Wall Street crashing to Angela Yee investing in Detroit real estate and viral Black community debates to the White House pressuring the feds. This is the kind of episode that's going to keep people talking. So let's jump into the chaos, the mayhem. Hope you had a pretty happy Easter. I ate a lot. Shouldn't have ate as much as I did. Had to be in the gym this morning, getting it up off of me. Went to see Sinners over the weekend, which was a crazy movie. To y'all who haven't seen it yet, go check that out. It's a different kind of movie, different kind of feel. I was throwing it back a little bit, but overall, I'll give it thumbs up. But anyway, so stock market meltdown. Angela Yee goes all in on Detroit real estate. 2025 dating scene is brutal. The U.S. credit scores are dropping. Trump administration revokes visas. Targeting Al Sharpton sitting down. Ayesha Howard speaks out. Hawaii leads in savings. White House pushing feds to cut rates. FDA halts food quality checks. Women now outdrink men. Dr. Trisha Bailey, Jamaica's richest woman. Speaker Mike Johnson on some You already know what he on. So we're going to get off into this. Today's deep dive is going to be on RCN. RCN's a major player out there in the industry. We're going to put the spotlight on them today and give you guys the game on if you should potentially go out and do business with them at some point. So let's get into the mayhem. All right, let's start it off with the stock market crash. It's the worst crash since the 2008 crisis, warns top U.S. economist. A leading U.S. economist, Harry Dent, is sounding the alarm, saying we're heading toward a stock market crash even worse than the 2008 financial crisis. Oh, hold on for 1 second, y'all. Something happened to my camera there. I don't know what happened. Give me 1 second. Yeah, I'm back. I don't know what happened right there, guys, but when you're in the world of technology, these things happen. So just bear with me. Where was I? Okay, the 2008 crisis, the stock market crash, and all that. Um, Mr. Dent believes that the so-called everything bubble still hasn't burst, and when it does, the fallout could be massive. Dent, a Harvard Business School alum, compared today's economy to someone trying to cure a hangover by drinking more. He says for over 14 years, the market has been artificially pumped up with stimulus money far longer than any typical bubble lasts, and that he warns and sets the stage for an even deeper crash than we've seen in decades. I don't know if you guys were around back in, well, pretty sure you were around in 2008, but I don't know if you was in the mix. I was right there working at the bank. And when the crisis came down, nobody was really prepared for it. A lot of people said they kind of saw it coming. And I say BS on that because no one in my circles, and I worked directly at the bank, had a clue. I'll never forget, pulled up and was getting out of my car. And at the time, particular bank that I was working for, big bank, they were shutting down not only my branch, but branches in the whole area. And that particular day, they were literally going to branch by branch. They had semi-trailer trucks out front. It was just a hot mess. I mean, I walked into my office and all I seen was busybodies running around, moving file cabinets, taking computers out. And that was the end of it. That was 2008. And I never forget, it's April 2008 when that happened. And the industry just went into shambles after that. And we all know what happened in 2008, probably all the way until maybe 2012, 2013, before things started to kind of get back to normal. It was a bad time. And they're saying that it could be worse than that. If it gets to be worse than the 2008 crisis, I don't know. I don't even know what to say to that because I would just remember Obama and them having to come in, kind of get things back on track. It was a lot of pain during those years. We couldn't make no money really. The markets was dried up. Money was on the sidelines. I mean, it was just a mess. I mean, we learned a lot during that period of time because, we had to kind of go through the motions because there wasn't no money out there, so it was a tough time. And I just hope that whatever's going on out there in the marketplace, that we could get it together. So that will not happen again, folks. It was bad. I mean, really bad. So let's keep our fingers crossed. We're gonna keep our eye on that. But the market crashing is a thing. So don't be out here thinking that that's not, something that could happen. And if it does happen, a lot of wealth will be lost. There's a lot of angry individuals will be walking the street. 2008, it was so many people lost their lives. A lot of people unalived themselves during that period of time because it was just a mess. And I was right there, just in the thick of it. So I understand what the economist is talking about, and I don't wish that on the country at all, not at all. But anyway, let's keep it moving. Angela Yee. I know you guys probably know Angela Yee. She used to be on the Breakfast Club with Charlemagne the God and DJ Envy, and then she kind of took her show on the road and created her own show. I don't know the name of her show right off the top of my head, but I seen something that kind of got my attention. I wanted to bring it to the forefront because, like I said, here on this platform, we're going to highlight people. We're not going to be afraid to, talk to people, let people know what people are doing. And these people that I'm talking about, they don't know me from Adam. But if I see them doing, I'm just like that. I'm not a hater by no stretch of the imagination. Don't even know how that came out of my mouth. The word hater. That's just how far away from it I am. So sometimes, when I see things and I think it would be beneficial to my audience, I like to just, bring it to the forefront and talk about it. And in this case, this is, Angela Yee, and she's in my area, the Michigan area. She's up in Detroit. But let's talk about Angela. She's native of Brooklyn. Like I said, known mostly to the world as the host of the syndicated radio show Way Up with Angela Yee, and previously The Breakfast Club, the influential talk show host where she sat along DJ Envy and Charlemagne the God for 13 years discussing hip hop and politics and dating until she departed in 2022. She's also an honorary Detroiter. Yee says that the more she visited, the more the city, the more she loved it here. And Cup is not yet only endeavor, and the Cup is not Yee's only endeavor in Detroit. In 2023, Yee purchased a 30-unit apartment building on 666 West Alladrine Street in Midtown. For the project, she partnered with Ladies of Hope Ministries founder, Dr. Topeka K. Sam, who reserved 10 of the units for formerly incarcerated women. People deserve a second chance, Yee says. A lot of these women are non-violent offenders. Being mission-driven was important to me. I'm moving into that space where I want to start doing things that mean something to me and that people are grateful to have. She says Detroit has become a second home and adds that she's fallen in love with the city and the residents here. I like seeing people that move from Detroit and move back, she says. I think it's amazing to see all the people that are coming back to Detroit. I understand gentrification so much because I'm from Brooklyn, and I know what that looks like in New York. So once again, Angela Yee putting her money where her mouth is. She in Detroit, not only just buying real estate, but she's strategically buying real estate, partnering up with individuals that in one instance, it's a good cause, but in another instance, it's good business sense, right? She's partnering up with agencies that need the space, and in turn, they have the ability to make sure that she's getting paid on a month-to-month basis. The real estate ain't free; it can't just pay for itself. But if it's just like a double whammy if you can get the real estate, rehab it, which she did, make it pretty, and then actually link up strategically with a partner out there that can bring individuals that need housing into the space and make sure, because of these types of agencies, you'll be able to legitimately be paid every month for the space. So I get it. I think more people are doing this. And if you're not, it's a very, very strategic, great way to handle your real estate, but at the same time, do something that's morally valuable to the community and to yourself, right? Kind of doing it somewhat myself with independent living homes. That's another avenue that I've been able to kind of stick my toe in and finding out that is so gratifying, because you get to help folks who don't have the kind of assistance that you have available for them, and at the same time you get to financially benefit from it as well. It's like a twofer. You give back, and by you giving back, you get to receive the things that you deserve for the fruits of your labor, and for you to be an independent thinker, to put yourself in that type of situation to get your gains, but at the same time, provide a great service for individuals who need it. So big up to Angela Yee. Big up to Dr. Topeka Sam. Sounds like they've partnered up for a great cause. I hope they're able to do more of this throughout Detroit, because I'm pretty sure it's much needed, because where else would she have gotten the idea from? Fix the problem. Typically people that gain millions, they saw that it was a problem, and they brought forth the solution for that problem, and the rest is history. So big ups to Angela Yee and the things that she's doing in the Detroit community. Let's do more of that. You know what I'm saying? Let's do more of that. All right, so let's keep it moving. Let me pull up. We don't want to pull that up. I'm experimenting with props now, so bear with me. Let's see. No, we don't want to go there. Okay, here we go. Found this pretty amazing right here. A new topic that came down the pike, saying that I'd rather stay single. The 2025 dating trend no one's joking about. So yeah, that's kind of a big thing out here. The dating scene, I hear it all the time. My partners, both females and males, talking about how crazy it's out here in the dating scene. But in 2025, more women are saying, I'm good, love, enjoy to the dating scene. Thanks to viral TikToks and honest conversations online, a growing number of women are choosing to stay single, not out of bitterness, but out of peace. They're remembering past relationships, weighing the current dating pool, and deciding that solitude feels better than settling. This isn't just a phase, it's a movement. So I don't really know, because I just don't know what's really going on out there, but I can only imagine. It's just so hyper sensitive out there, just by what you see on TV, what you see on social media. Everybody's, should you go 50-50 in the relationship? Should the man be a provider? 100%. It's just so many dating debates that's going on out there. And like I said earlier, if you're dating and you're not dating to build something with someone, then it is a waste of time. You're just spending hard-earned money, going back and forth, getting what you want and moving on. And it's just a vicious cycle from what I can tell. But if you find someone who's like-minded and, y'all decide that y'all gonna go ahead and get it cracking, then that's a whole nother ball game right there. And I think enough of that is not happening. I think that's what the issue is. We're not building with each other. We're lovey-dovey and playing games and all that craziness that occurs, instead of locking in with somebody that's like-minded and that's not lazy and want to get to it. That's it right there. If you find somebody like that, single women, who's willing to lock in, but it can't be all that. You gotta buy me this. I need this. I need my bills paid. Come on now. To me, that's getting old. I get it. In some situations, if you need assistance, if you need help, then yeah, okay. If you got it like that, you then hooked up with a brother, you hooked up with a sister, and that's the case, then that's one thing. But just to be out here, what they say, sack chasing, gold digging, male and female, it's just you got better use of your time, in my opinion. And I came across this quote right here, and this sums it up right here. This quote right here. Broke people buy things, rich people buy their time back. Broke people buy things, rich people buy their time back. I thought that was a quote for the ages, and if you really think about it, broke people are the ones who wants this bag and this designer that, and people with money, we setting ourselves up to get our time back, instead of having to clean your home, hire help, instead of having to, pay for this service or you do this service yourself, you hire help. Buying your time back is the key to all this, because your time is the only thing you can get back. You feel me? So, the dating scene, although it may be crazy, ladies, gentlemen, dating has been around from, the beginning of time. I think a lot of us got to get back to, chivalry. We got to get back to, how it used to be, really macking a female down and doing it in a sincere way and letting her understand your value and you understand her value. And then y'all link up and get to it. Sometimes you may think that that's what's happening on the front end, and you might find out later that ain't the case. But trust me, it'll reveal itself. It'll reveal itself, and then you act accordingly. But on the other side of that, don't be afraid to date. Don't be afraid to fall in love, because that's what life is about. You only got one of these. So, if you can find somebody that you can truly invest your time and energy in and is reciprocal, and y'all got some goals, not just individual goals, but goals that y'all can accomplish together. You got to look at the person that you're dealing with, and if they're hiding things from you and not being on an up and up, then it might be a good opportunity for you to move on. I think the world today has to be about transparency. You got to be able to chop that up with the individual that you're trying to build with, because you never know. They may have a grand idea that can help you to eliminate some of those things that you might think are baggage or could be a hindrance to the situation. So transparency, communication, emotional intelligence, all that matters. All that arguing, bickering, and fighting, and chasing, and, in each other's phones, DMs, and if you're about that business and you're doing everything, you're being the best you for the person that's in front of you, and you can tell that that person is being the best them, then that's the one. Once you see that, you lock in, and you get to whatever you guys are trying to get to, and then you look up, y'all have accomplished major things together, and then you could just live life accordingly. That's what I think. I mean, not to say that I've been perfect at it. I'm still working. What do you call it? Progress. I'm in the progress of working towards being all the way that way, but I'm that way in general. That's how my outlook is. As I move forward throughout, the world and doing the things that I'm supposed to do. That's how I see it. That's how I envision anything that I get myself into. I'm not coming to the table with nothing of the crazy, none. I'm trying to stay focused. I'm trying to be with the person that wants to be with me, and we build and, ride off into the sun. I think most should do the same. So, ladies, don't be discouraged. Everything's going to be good. You just got to make sure that when you see red flags, don't ignore them, pay attention to them, discuss them. And if you have somebody that you can lock in with, lock in. That's the last thing I'll say with that. When you got somebody you can lock in with, when you find that person, lock in, and don't be afraid to date, because you ain't gonna be able to find them if you're just sitting at home on the couch. I get it, you want your peace, but find the right person. They'll make sure your peace is protected. All right. Okay. So let's keep it moving. Let's pull this up real quick, and we're going to talk about this. The U.S. average credit scores fall as federal student loan delinquencies return after a multi-year pause. All right. So the U.S. average credit scores fall as federal student loan delinquencies return after multi-year pause. The average U.S. credit score has dropped to 715, making the first noticeable decline in years. This drop comes as missed federal student loan payments are once again being reported on credit reports. During the COVID-19 emergency, a payment freeze prevented these delinquencies from being reported. That freeze ended in October 2024. So people, if you didn't know this, the freeze stopped in October 2024. So if you're not taking care of your student loans, your credit's taking a beat. With a 5-month grace period that expired in February 2025. Since then, student loan delinquencies have started showing up on credit files. According to FICO, about 2.7 million borrowers now have reported delinquencies, and another 5.4 million haven't made any payments since the pause ended, raising concerns that more delinquencies may follow. You see what I'm saying? I mean, that's self-explanatory. You had a minute. Them student loans ain't no joke, and you can't. I don't even know. I think it might be a way to like go into bankruptcy to getting rid of them now, but that's how serious student loans are. No matter what you do, they stick with you. So you got to figure out a strategy to get them up out your world. I know paying them off is the strategy, but until you can do that, you got to figure out a way to get those payments made, because they pull the credit all the way down into the cellar. For whatever reason, it seems like that particular debt is the debt from hell. So If you have a strategy, first of all, realize that there's no more you not paying your student loans. That ended in February. So from February up until now, they're looking at what they used to look at before COVID hit. So you got to get back into that same mind frame that you had prior to COVID, because it will damage your credit. They're telling you this. It's already dropping. So pay attention. You know that you got student loan payments that have to be made. Figure out a way to get them paid on a regular basis, but more so than that, figure out a way to get them paid off. There's many ways to get that done out here in the marketplace right now. We're going to talk about a way at some point here where, we can show you how to make six figures through mortgage brokering, but that's going to be a whole thing that I'm going to bring to the forefront a little bit later. But there's a way for you to make extra money in a very, good way where you don't have to be worried about things like that. You can, take care of your business. You ain't got to quit your job. You ain't got to do none of that, and get you some extra income. That way you can pay off these debts that's, pretty much wrecking your credit scores, which in turn doesn't allow you to be the type of borrower if that's what you need to do out here in the marketplace. So, pay attention, figure it out, come up with a strategy. And if your job's not giving you enough money to take care of whatever else you need to take care of, plus this, then you're gonna have to figure out an extra stream of income that can be devoted towards paying off your student loan payments. So that's the strategy. You don't want to just keep taking money out of your pay every month to take care of this. I mean, you went to school in hopes that you could get out here and make the kind of money where student loan payments wouldn't be a big deal. But as we can see, student loan payments have always been a big deal, and they'll always be a big deal. So you got to figure out a way to get it done. All right. So that's that. Let's see what else we got cooking. Nope. What we got going on here? All right, so let's talk about visas being revoked and how the Trump administration is using a travel document to expel students and educators. Now, for hundreds of students already at U.S. colleges and university, it's turning into a one-way ticket back to their home country as President Trump administration continues an aggressive effort to revoke visas and push academics out of the country, whether voluntarily or in handcuffs. Visa programs in the U.S. are complicated with many requirements and conditions, and the State Department says it has broad power to terminate them. How do student visas work? Coming to the the United States for anything but tourism usually means wading through an alphabet soup of visa types. More than 24 for people who do not intend to become permanent residents of the U.S. All three types of educational visas use a government online database called SEVIS, the Student and Exchange Visitor Information System, to allow colleges and universities to provide legally required information to the State Department and the Department of Homeland Security about international students at their institutions. That information includes the students' addresses and confirmation of their academic work. All right, so once again, it just seems like the administration is trying to like cleanse the United States of others. And I don't really understand what that's about because the United States has always been about others. Um, the United States is made of others. It was built by others. So now you're dealing with individuals who are here to get an education, want to get an education, have made sacrifices to be here to get that education, and we're trying to stop them from doing that. I don't understand it. And it doesn't make good business sense for the United States. These people are becoming doctors, lawyers, business people, teachers, the whole 9 yards. And they need these visas in order to, contribute to the United States. I get it. We want to have all the jobs for just the folks here in the United States, but how realistic is that? You know what I'm saying? How realistic is that? So I just don't understand DEI. I don't understand visas being taken away from students. To me, it seems like it is a negative sum game to me. So I don't understand why we're playing so many negative sum games as if these folks are doing things that's stopping them from being productive in a country where being productive is smiled upon, not frowned upon. So I don't really understand what's happening with our government. It's starting to feel a little shaky to me. We're going to see how it pans out because once elections have consequences, and you have to allow the next administration to come in and actually do what they feel their agenda is at the end of the day. Whatever their agenda is, you have to give them an opportunity to see if that's going to work. Sometimes it works, sometimes it don't. So we're getting ready to find out with all these drastic measures that's shaking up, the world, shaking up the economy, shaking up the immigration, world. We have to give this administration, as crazy as some of this stuff is, we have to let them do what they do because we're not even a year in. We got 4 years of this. And we're already running around, like chickens with our heads cut off because of the certain things that's happening. So let's just pump our brakes, make sure that, we're keeping an eye on everything. We can't be asleep at the wheel. Democrats, independents, can't be asleep at the wheels. Republicans as well. We just want to make sure that we keep the United States in a place where we can continue to grow. We can continue to have our freedoms and be the best that we can be. That's how I see it. But stop taking people visas. This is ridiculous. Putting them in handcuffs, we need people to be great in this country no matter what. And visas were created for a reason. They've birthed some of the greatest minds, the United States have ever seen. So they've been a major part of the fabrics of the United States. So when we see these kind of things, we gotta talk about it. We gotta bring it to the forefront because if we don't, a lot of times they could just go unsaid. So here at the Mortgage Mayhem podcast, we're gonna be talking about a lot of stuff, man. So I'm not trying to miss things that a lot of people may not be paying attention to because these things are important as well. So we're going to keep our eyes open for sure. And here's another thing that I don't like that just came down the chute. The FDA shuts down safety quality checks amid staff cuts. See, this is what I'm talking about. Sometimes you come in, you go crazy thinking that you're doing all the right things, and we as Americans suffer. In a move raising major concerns across the food industry, the FDA shuts down food safety quality checks amid staff cuts, putting key food testing programs on hold. According to Reuters, an internal FDA email revealed that due to a wave of layoffs, the agency has paused its laboratory quality control programs, a decision that could impact national food safety. These cuts are reportedly impacting testing for cyclospora in spinach and glyphosate pesticides in barley, two areas that are essential for tracking contamination risk. The suspended programs are part of the FDA's Human Food Program based at the Moffitt Center and linked to the Food Emergency Response Networks, which coordinates federal and state labs during foodborne outbreaks. The email obtained by Reuters noted that staff reduction included a key quality assurance officer, an analytical chemist, and 2 microbiologists. Without this team, the agency reportedly lacks sufficient resources to conduct quality checks for multiple pathogens and contaminants. Among the suspended tests are Cyclosporia, a parasite often found in imported produce like leafy greens. It causes severe intestinal illness. Glyphosate, a controversial pesticide commonly sprayed on grains like barley. It's currently under scrutiny for potential health risks. And bird flu in dairy products. Earlier this month, the FDA also suspended its initiative to improve bird flu in dairy products earlier this month. The FDA also suspended its initiative to improve bird flu testing in milk and dairy amid the same staffing shortages. The suspension is currently set to last through September 30th, but critics worry this will delay data on contamination risk and slow down responses to airborne type illnesses. Now, just riddle me this. Why are we? I've never understood why we be having such a hard time with the FDA and making sure that we have safe drinking water and safe food. You know, I know about drinking water. I'm from Flint. So that issue, I didn't understand when it occurred. I still don't understand how it occurred and why it lasted as long as it lasted when we're a country that's supposed to make sure our citizens are being taken care of. The FDA was created to make sure we have clean food, clean water, clean air. And for whatever reason, political parties likes to use the FDA as a mechanism to divide. I've never understood that. Why wouldn't we all want to be on the same page when it comes to our food, water, and air? It doesn't make no sense to me. And this kind of stuff right here, pausing, different testing, and they're telling you some of the major issues with some of the items that because of us not being on top of our games as the FDA agents by firings and layoffs and key people that make sure that air, water, and our foods are going through the right processes in order to make sure that they're safe for the communities, the United States, and overseas as well, because we're shipping food to places. So I just don't understand how because we're going on a cutting job spree, that the things that we're not really paying too close attention to are being affected. Your food, water, you just think those things are going to necessarily be taken care of because you have people like the FDA in place to make sure that they're being taken care of. As we can see, they're not. So once again, we're going to talk about everything here. I don't know who might be listening. So, just based off of my dialogue and my opinions, not to say they're going to stop anything or help anything, but as long as I get it off my chest, I can sleep at night. And I don't like the fact that we're shutting down quality checks because of staff cuts. And with that, unnecessarily, from every indication, unnecessarily staff cuts, especially if they're affecting our food, water, and our air. We got to do a better job. We just have to do better. I don't know why we can't be great in all aspects. It's like right there in front of us. Like, why would you fire microbiologists? Why would you do that? I don't get it. Why would you fire analytical chemists? Just the word analytical chemist is so profound. Like, they don't have jobs. Like, and they don't have jobs at the FDA that is, making sure we have clean water, making sure we have food, clean air. That's mind-boggling to me. So anyway, let's keep it moving. What's up with this? New medical study finds young women aged 18 to 25 are binge drinking slightly more than men of the same age. What's going on out here, women? Y'all out here getting your drink on more than men? So the new medical study finds young women's age 18 through 25 are binge drinking slightly more than men of the same age. A recent JAMA, Journal of the Medical Association, study found that young women ages 18 to 25 are now binge drinking slightly more than men in the same age group. Overall, binge drinking and alcohol use among Gen Z has declined compared to previous generations. However, among those who still binge drink, women have surpassed men, a reversal of previous trends. Binge drinking is defined as 5 or more drinks in one sitting for men and 4 or more for women. The narrowing gender gap is binge drinking is seen as concerning because women are more vulnerable to the negative health effects of alcohol due to biological differences. The decline in drinking among young people may be linked to cultural shifts. Drinking is no longer viewed as a typical part of growing up. Additionally, the COVID-19 pandemic may have reduced social drinking opportunities, leading to change habits. Early drinking behaviors can be a strong indicator and predictor of long-term alcohol use patterns. All right, folks. Binge drinking, both. Look, alcohol is tricky. You want to be celebrating in certain cases, but if you're out at the bar and you're binge drinking, you're drinking 4 or 5 drinks, you're drunk. If you go outside and get in your car and drive, you are legally drunk and you can do some damage. So, if you are doing this, please, please, please make sure that you're not getting behind the wheel of any vehicle at all. And make sure that if you are doing this, which you shouldn't be doing this, I mean, if you're out having a good time, 1, 2, 3, 4, 5, 4, 5 drinks for anybody is gonna have you staggered. And what are you binge drinking like that for? Trust you me, I've had my share of being out and drinking and having a good time, and but I just wasn't thinking. You start to think that you're invincible, and you're not. You see it all the time, these accidents, these people dying, kids dying, ladies, husbands, wives dying in these car crashes because somebody's in a bar somewhere, club somewhere, or at home somewhere binge drinking. So I don't want to be on no soapbox about this, but ladies, come on now. Typically men would be, in these bars drinking crazy heavily in hopes that they can have enough confidence to get to you women and potentially have a good conversation that could lead to whatever. But now, y'all both a drinking mess, a drunk mess in each other's face, breathing tequila, talking about a whole bunch of nothingness. So if you're out having a good time, you can have a good time without getting sloppy drunk. You can. Can't tell me that you can't. So be careful, because although, that's the statistic, that's what's happening, but it's what happens after you get through with those drinks that should be concerning. You put yourself in those vulnerable situations, ladies, when you have, when you out there full like that. Men prey on women like yourself when they see you taking 4 or 5 drinks, unfortunately. So be careful. That's what I wanted to say about this here. Be careful while you're out here having a good time. And if you're at home having a good time, don't be having a good time and then getting your butt behind the wheels to go have another good time somewhere else, because that could lead to tragedy. So if you know you about to go out and get your swerve on, get your kicking it on, do it responsibly, because my child, your child could be minding a business, going about their regular evening, and here you come because you didn't been binging, and everybody's world's turned upside down. So be careful while you out here moving around, ladies. I don't like this study, but it's a study for a reason, because they're alarmed at it as well. No one's saying ladies can't have fun, but we're just saying be careful while you do it, because a lot of things can happen after you done had those drinks, right? Okay, let's keep it moving. I want to talk about this young lady right here, the wealthiest woman from Jamaica, Dr. Trisha Bailey. And you see what her net worth is, ladies, right? That's what I'm talking about. If she could do it, why can't you do it? If she could do it, why can't we do it? She's from Jamaica, um, you know, and she's the wealthiest woman from that area. Dr. Trisha Bailey has a net worth of over 700 million. Trisha Bailey at Creating My Own Yes is known as the wealthiest Jamaican-born woman. with an impressive net worth of at least $700 million. Bailey, an entrepreneur, author, and CEO, has founded 15 companies, including Bailey Medical Equipment and Supplies and Bailey Pharmacy. So, she getting to it. Once again, we're bringing up, highlighting two females, Angela Yee earlier. Now we're talking about Dr. Trisha Bailey. Like I said, I don't know her from nowhere. Probably would never meet her, but I'm going to talk about individual and people who I think deserve to be talked about. This is impressive. This is very impressive. This lets you know that hard work, getting to it, never quitting is really what it's all about. So let's give a big shout out to Dr. Trisha Bailey, wherever you are. Keep grinding, sister, because 700 million, I mean, that's generational wealth. That's generational after generational after generational wealth. So she can pass away tomorrow and her grandkids going to be squared away because of the work that she put in here today on this earth, right? That's what it's all about. We got to stop being selfish, thinking that we're just going to do enough just for us. No, you gotta get to it to the point where when you walk away, you know how hard it was, for us to not be a part of generational wealth and not have anything passed down to us, not an inch of a head start, not an inch of help. We had to just all get it from the mud for the most part. And this next generation, even my generation, I didn't have to, when the generation before me, my mom's generation, they were on it. They started to understand that, making sure that when they leave here, they give their kids a chance to do something. And now it's our turn to make sure that the same thing happens. We can't be the generation that doesn't leave generational wealth. It just doesn't make sense. And once again, it's biblical. Not to get all biblical on you, or to get biblical on you. You ain't supposed to leave here and not leave anything to your seeds. That's just crazy when there's so many tools, life insurance, investments, so many tools that's available to you that allows you to do just that. So why are we not taking advantage of it? Why are we not taking advantage of life insurance? We know the GoFundMe, all that, the things that everybody be talking about on a regular basis. All that's because we're not taking advantage of the tools that's here to make sure when it's our time to go that those things are in place. So let's make sure that we're building generational wealth. Let's just make sure that, when we leave here, we have our business in order so our kids don't have to be running around trying to figure out things because we didn't handle our business on the front end. Right? All right. So let's talk about this guy right here. So, U.S. House Speaker Mike Johnson claims that the budget cuts to Medicaid will keep young men from playing video games all day instead of working. So Mike Johnson claims budget cuts to Medicaid will keep young men from playing video games all day instead of working. House Speaker Mike Johnson defended proposed $880 billion Medicaid cuts by suggesting that able-bodied young men are abusing the system and should be working instead of playing video games. He argued that work requirements would save money and protect resources for those truly in need, like the elderly, disabled, and single mothers. However, data shows most Medicaid recipients already work or are unable to due to health, disability, or schooling. Critics warn these cuts could strip healthcare from millions, especially those temporarily unemployed, and threaten the survival of hospitals that rely on Medicaid funding, especially in rural areas. The proposed cuts are part of a broader GOP plan to reduce federal spending, but the moves have sparked concern even among some Republicans who fear severe consequences for low income Americans and the healthcare system as a whole. So, you know, um, this is how I feel about this. I'm not saying that, I don't know all the different dollar amounts that go to Medicaid. I just know Medicaid helps a lot of people. Um, and if you're cutting Medicaid for those who really and truly need it, then I'm against that. But if you're cutting in areas where people are taking advantage, because there are people taking advantage of the services, that I can agree with. Can't be taken advantage because when you take advantage of the services, that's just money, less money available for those who actually need the services. So if you're out there doing what he's saying you're doing, then shame on you. I don't know that that's the case, but sometimes politicians they speak hyperbole, um, and they go to the extreme to get their points across. And I'm assuming that's what he's doing here because he know that soundbite will get his base energized because it makes it seem like he's being a Medicaid warrior. I'm not too sure if that's the case. I don't know his history. I don't know his history of voting when it comes to Medicaid. I know the GOP talks a big game about cutting debt, and they typically are the ones who come in and create tons of debt. And then when somebody else comes in, then they scream, cut, cut, cut. So I've seen that happen multiple times. But Medicaid is important. I'm not saying it should be a crutch, but the ones who need it, like the disabled, the ones who need it, that's recipients of not having health care and they need health care. We can't be cutting billions of dollars from programs that's helping Americans. I get it. The Republicans, the GOP, are the party of pull yourself up from your boot, with your own bootstraps, however that slogan goes. So I get where they be coming from, and a lot of the conservative GOP members are about or have been forever wanting to cut the safety nets up under people that's less fortunate. I get it. That's a place that they want to kind of bring a scalpel to, or in this case, a chainsaw instead of a scalpel, to cut these programs to pay for tax cuts, things that their agenda calls for. So until I see some massive cuts in defense, then I'm not just going to be okay with them taking a sledgehammer to programs for the less fortunate. I even seen them saying they want to cut off Head Start. I'm like, what? What did Head Start do to these folks? Like, they don't want the kids to become educated early? I don't get it. Or do they think these programs are inefficient and then they don't work? Because if that's the premise, then you should be figuring out a way to make these programs work, because they were brought to the forefront for a reason, to help those who can't pull themselves up by their own bootstraps. People with disabilities. I know a lot of people in home care need Medicaid in order to receive services. Grooming, meal prep, just services for those type of individuals who need the assistance, and they, through the home care Medicaid program, they're able to pay this, the states are able to pay these individuals who CNAs or individuals who are already taking care of their loved ones. We had a sponsor, All Inclusive Home Care, who does home care, and that's exactly what they do. They take care of individuals, or they partnership with individuals who are already in the home taking care of their loved ones and not being paid. That's done through Medicaid. These group homes for individuals who need services, that's through Medicaid. So I get that they want to save money, but at the same time, they got to be, it's almost like they don't have a heart for whatever reason. The empathy is in the trash, as Bubba Dub says, trash. The empathy is trash. So let's kind of figure some things out. Mr. Mike, Speaker House, Mike Johnson, where let's take a scalpel and not a sledgehammer, because I know some of these programs can be a little bloated, and we got to get in and figure out fraud and inefficiencies. But let's not leave our most vulnerable out there, to hang, because that doesn't help. That doesn't help the United States. That doesn't help communities. And these are people too at the end of the day. So let's be a little bit more cognitive of other people, and if we can help through these programs that have been around from forever, so they've helped millions of people. So it's not like it's just programs that's there and they're not helping anybody. That's not the case. So let's keep an eye on that. I know I'm gonna keep an eye on it. And when something actually comes down the pipe, we'll come back and talk about it. All right. So in the meantime, in between time, let's get to this. Target CEO Brian Cornell will meet with Reverend Al Sharpton to discuss the company's decision to roll back DEI programs. Why Reverend Al Sharpton? We don't know. But to discuss the company's decision to roll back DEI programs, that's one of the reasons why Al Sharpton. We don't know. Target CEO Brian Cornell is set to meet with civil rights leader Reverend Al Sharpton in New York this week amid backlash over the company scaling back its diversity, equity, and inclusion efforts. The meeting, requested by Target, follows growing pressure from civil rights group urging consumers to boycott the retailer. Although Sharpton hasn't formally endorsed a boycott yet, he supports the concerns raised and warned that if Target doesn't reaffirm its commitment to the Black community, including investing in Black-owned businesses, he may consider calling for one. Sharpton criticized the company for appealing to shift its values based on the political climate, saying if an election determines your commitment to fairness, then we have a right to withdraw from you. Many of you keep asking why they selected Reverend Al Sharpton, and the real answer is We don't know. I don't know either. I mean, Reverend Al Sharpton is not going to be able to go to Target and talk to them about DEI. And if they're not going to make any changes, him come back to the Black community and pretty much try to pitch the Black community on anything outside of them not switching their policies. It don't matter who Al Sharpton is. And Al Sharpton is the guy. But people are fed up, and it ain't getting, including Al Sharpton, I'm sure, about all this whitewash when it comes to DEI. They're just fed up with it, and companies are going to continue to take a beating. They see what a lot of companies hope, just people in general. They hope that eventually it'll go away and they'll be able to get back to normal business. But in this case, I just don't think it's going away, because even me now, when I see a Target, I be like, if I Home Depot, I'd be like, Anybody that's been on that roster of companies that, decided that they feel like everyone shouldn't be at the table, I got a blind eye to them. I'm looking sideways at them, because prior to that, Target was doing just great with the DEI initiatives. No, here's the crazy thing about DEI. I haven't heard anybody screaming about DEI anything until this new administration, who wants to stop schools from talking about history, who wants to ban books, just a number of things that make you feel like you're in a dictatorship, so to speak. This is what's been going on since the election, which elections have consequences. But we're not going to just allow whoever's in office to turn the country into a dictatorship or a kings and queens type of royalty environment, because we've been free for too long. Some free longer than others, but free nevertheless. So for us to just kind of go back to feeling like we're not free again, that's going to be a hard pill for us to swallow. That's going to be a pill we can't swallow. And we're going to continue to be on companies' heads that feel like they're trying to take us back to a place that we all know wasn't fair. We all know was, in some cases racist. But us as people, we gonna keep it moving regardless. You could try it. We've seen the worst of worst and overcome it. So little DEI, whitewashing, African American people, we've had to, fry bigger fish. So we'll see what Reverend Al Sharpton comes back to the Black community table with. But trust you me, he is not the one who's going to just magically tell people go back to shopping at Target if he doesn't have a foolproof plan on why. I know that. So whatever he's doing, let's big up him, because they picked him as the representative for DEI folk. And Al has been on the forefront, on, not to say Al's perfect, but no one is, but he's definitely been on the forefront of Black issues. So he has that pass to go sit at that table and listen to what Target is talking about. And if it makes sense, it makes sense. We'll be the one to judge. So good luck, Al, but We'll be watching. We'll definitely be watching. All right, so let's get into a little bit of mortgage news. And I just wanted to kind of touch on this real quick. The White House induced Fed rate cut, they're saying would likely push mortgage rates higher. And the reason being, the White House is pushing the Federal Reserve to cut rates while the central bank adopts a wait and see approach. President Trump has also explored the possibility of removing Chairman Powell before his term is up in May 2026. Let's explore how outcomes could affect the mortgage news. If the Fed succumbs to the White House pressure and cuts the Fed fund rates at an upcoming meeting, mortgage rates are actually likely to increase. What does that mean? Mortgage rates are long-term rates that are determined by the bond market investors and reflect a collective view on economic conditions years into the future. The Fed controls the Fed funds rate, an overnight lending rate that influences but does not directly impact long-term rates like mortgage rates. In fact, mortgage rates often do not move in the same directions as the Fed fund rates. The Fed's independence has long been seen as critical to its ability to effectively maintain low inflation and unemployment. If the Fed rates are at the behest of the White House, investors will perceive that the Fed is not doing its job and may anticipate that inflation will only get worse. That means rate needs to be higher in the long run. This scenario actually played out in the 70s and the 80s when President Nixon pressured then Fed Chair Arthur Burns to keep rates low ahead of the 1972 presidential election. Inflation further spiraled out of control as a result, and it wasn't until Fed Chair Paul Volcker hiked the Fed rates. Listen to this, man. To 20%, bringing on a severe recession that inflation was out of control. Alternatively, if the Feds were pressure into also conducting quantitative easing, where they directly purchase long-dated treasury or mortgage securities, it's kind of what happened in 2008. That would mechanically bring down mortgage rates. However, quantitative easing has only been used in times of extreme duress to the economy, financial crisis, 2008, and COVID. And there is no legitimate reason currently to use this tool. The best way to bring down mortgage rates would be to address the fundamental drivers of inflation in the economy, including recent changes to tariff policy and the long-term shortage of housing. Chairman Powell losing his job will not necessarily result in cuts to the Fed fund rates because he is only one member of 12 on the Federal Open Market Committee, right? The Federal Open Market Committee, which sets monetary policy, is made up of 12 voting members. 7 of these are from the Board of Governors, including Chairman Powell, and 5 are presidents of various Federal Reserve banks. The members of the Board of Governors are nominated by the president and confirmed by Congress. However, the presidents of Federal Reserve banks, 5 of whom whom vote on the FOMC at any given time are chosen by each bank's board of directors and confirmed by the board of governors. Historically, the Fed chair has outsized influence over the Federal Open Market Committee. However, that need not be the case. If the Fed chair were to be seen as responding to political influence, the other chair members may well vote against them. So the Federal Reserve is supposed to remain independent. And I get where the president is coming because he's from the real estate market. So he wants the rates to go down because that's just going to spur more investment. So I get it, but you just can't be a dictator and just start firing people in hopes that you're going to get what you want. Like they said, it ain't just him. It's a board. And I'm pretty sure everybody, I mean, the rates have jumped. I mean, they've come down tremendously since COVID. I mean, it was crazy. So slowly but surely getting inflation under wraps has allowed the rates to come down. We can't just start willy-nilly doing stuff and then inflation goes back up and we have to, lift the rates back up in order to make sure that this thing evens itself out and we can continue to pay our bills and, continue to have a market that's healthy. So I don't know exactly what this, I know the president and the Fed chair, they're kind of sparring right now. Hopefully the president's playing the long game. And a part of his negotiation is talk crazy to the Fed chair in the public, which he hopes that might allow the Fed chair to drop these rates down some more. Because if they get these rates down in the 5% range, it's going to be bananas out here in the marketplace. At 6% is crazy. Low sevens is insane. But if we get them down in the 5% range and the market is healthy, real estate is selling, these tariffs ain't holding builders down, contractors down, so they can get to what they got to get to. And people like myself are able to continue to, do loans for investors, and investors are able to continue to build portfolios and, be able to buy real estate in these communities that need help with real estate, rehabbing real estate, and then they're able to sell these real estates for profits, but allow people to have happy home. Communities are being developed. Yeah. If we could get rates down and everything else is moving like they're supposed to be moving, then I'm all for it. If this is a strategy that the president is taking because he figures this, just the mere fact of him having the audacity will get the Fed chair to figure out a way, to get this done, then strategy matters. So if this is how he feels like he needs to go and then it actually happens, then kudos to the president, because we do need these rates to get down into that 5, don't even, when we get to 4 in, it's crazy. But if we can get them down in the 5s, maybe low 6s, but just in the 5% range, then that's a game changer. And we welcome that in the industry. I promise you, we welcome that. So good luck, Mr. President. You got your hands full with this independent branch of the money, the Fed, because it's not, they're independent. You can't, you do pick the board and Congress approves it. But at the end of the day, they're going to listen to the Fed chair. He's the Fed chair for a reason. And if he's sitting there and he could be changing rates and things could be going differently, that's one thing. But he's been through a lot coming out of COVID to get us to where we are right now. So through that pain, he held steady. He stayed conservative when he needed to stay conservative. And then he put forth, his effort to get rates down when it was time to get rates down. When inflation started to settle, then rates started to drop. So inflation rates, they kind of coincide with each other from every indicator that I can see. So let's keep our fingers crossed on that. I know in our world, that would be huge. All right. All right, so let's talk about some mortgage hacks today. I got a couple great ones for you guys that I think is going to allow you to, take a look and see if you can add it to your way of doing business in the mortgage game, so to speak. All right. So house hack with multi-units or ADUs, right? Live in one unit and rent out the other has always been a hack. FHA and conventional loans allow you to buy a duplex, triplex, fourplex with as little as 3.5% down. Access rental income immediately to offset your mortgage. So you get a duplex, you live in one, you have the other one rented out. That one pretty much takes care of your rent, and you're pretty much living rent free, and you're building equity. Okay. Cities are approving accessory dwelling units, ADUs, faster than ever. Perfect for backyard rentals. I see a lot of this in California. I've done a couple deals where they've either added an ADU, and it just, it's kind of like a little starter home in the backyard. It has all the amenities of a home. Check it out. Google ADUs, accessory dwelling units. They're pretty neat. You could just set them up in your backyard, and instead of having, someone actually in your property living, they can have their own, kind of like pool house in your backyard, and you could be charging them max rent for that. So yeah, that's definitely a strategy. That's definitely a hack that a lot of people are taking advantage of. It's not, you can't do it in every area, but in most areas, yeah, you can do it. So that's number one house hack. Number two, use a HELOC to fund your next flip or rental. If you built up equity, open a home equity line of credit and use it as a revolving funding source. It's faster and cheaper than a hard money loan, or private money loan, especially for gap funding or renovations. That's what I see it for, because with HELOC, especially like the kind of funding that we do, because we typically do 100% of the rehab, you have to come out of your pocket and we refund you those funds. And if you got a HELOC, the HELOC can pretty much pay for all your rehab, and because you're getting your money back, all 100% of your rehab dollars back by the time you get done with the final draw of your rehab. So you can literally take the money, pay off the HELOC, because it's like a credit card. Then you can just keep doing that over and over and over again until you built a massive portfolio, or you flip multiple properties and you have a massive bank account because of those flips. And you can do it with a HELOC. If you got equity in your home, instead of taking the equity out and just doing unnecessarily things, you could take that equity out in a HELOC and go to town, get busy, get to work, buy, because now You have a credit card right there that you can use for your rehab. And every time you get done with the rehab, you're just paying it off. So that's just adding more strength to your credit. That's allowing you to be a savvy investor. You don't have to wait around. You don't have to go into your cash in order to do your rehabs. You got the credit card right there, and you can pay that thing off by the time you get done with your rehab and start it all over again. The bank will love you. It just makes sense. Great hack. Great hack. Look for tired landlords for public records, pull public records for landlords who've owned their properties 10 plus years. Many are ready to retire or offload at a discount. Send a simple letter or knock on doors. The deals are out there. Tired landlords. If you're trying to build a portfolio, realtors aren't just getting it done, or you just want to have multiple places in order for you to be able to get two properties. This is a perfect way to do it. They just giving you all kind of game right here. Pull some public records. Landlords that's had their properties 10 plus years, typically they're ready to cash out. You could get them at a discount. It's kind of layup-ish. They got equity. They've been there for 10 years, or there's a rental property. They're older. They're just tired of, the day in, day out of leasing to individuals, and they want out. They want to cash out. This is a great way for you to lock in and find hidden gems. People ain't using this hack. People going the traditional way of finding properties. This is a major hack, right? Another one is use the 203K loan to renovate a fixer-upper. This is a good one. FHA 203K loan lets you finance both the purchase and the renovation of a distressed property with just 3.5% down. Ideal for first-timers or anyone trying to force equity. It's a great program. You can't use it a lot, but I know you can. Think you might can get it off a couple good times, 1, 2, 3, 4, 5 times. I'm not sure, but it's a great hack, and you're not coming out of pocket in order to get that property, and they're including the actual renovation costs in the loan. So, yeah, the 203K is definitely a great loan for newbies. Someone's looking to buy a duplex, triplex, what we're talking about earlier. This is a great hack for you, right? So that's going to be our hacks for today. We got you 1, 2, 3, 4 good hacks. Hopefully, you're able to follow me on those. Like I say, we hear the reruns of the show will be, available throughout the week and then on the weekend. So if you missed anything, you can always chime back in and check it out. But yeah, those were the major mortgage hacks. I think everybody should really look into those, because it's just money, and on top of it, ain't nobody telling y'all this stuff. So you're just out here in the world missing out on information that could be, it can help you build generational wealth, right? All right, so next we're going to bring up, of course, our deep dive. And today, the deep dive is going to be on RCN Capital. Great company. But without further ado, we're going to bring them up, let our great 1-2 punch individuals talk to y'all about RCN. And then after that, we're going to get out of here and, get it back started again tomorrow. So I'm going to pull myself down.
Welcome to the deep dive. So you're looking to get a handle on real estate investment financing,
Mhm.
and you pointed us towards RCN Capital. They're a private direct lender, been around since 2010.
Yeah, that's right. And think of this as, a way to quickly get up to speed on what they do, what it means for someone exploring this space.
Right. We've got their website info, details on their loans, fix and flip, long-term rentals.
Yeah,
What else?
multifamily, even ground up construction, plus how they operate as a direct lender, their focus on partnerships. Lots to unpack.
Okay. The mission then is to really dig into RCN Capital's offerings, see what financing paths are open, and maybe find some surprising bits about private lending along the way.
Exactly. Going beyond just a list.
So let's start there. RCN Capital, they say they're a private direct lender nationwide
Yeah.
since 2010. Why does that direct part matter so much?
Well, that's really fundamental. Being direct means they are the source of the money, RCN Capital.
Okay.
They're not a broker, not a middleman finding you a loan elsewhere. They use their own capital.
Which means
Often a smoother process, probably faster.
Mhm.
You're dealing right with the folks making the decisions, holding the purse strings, no extra layers.
makes sense. Your application isn't bouncing around, it stays in-house. They say yes or no.
Pretty much.
Okay. Now, they seem to have a whole menu of loans for investors. What are the main categories you're seeing?
They've kind of structured it around different investment strategies and timelines. You've got the short-term stuff first, like
Alright.
their fix and flip loans. Pretty clear what that's for. Buying, rehabbing, selling relatively quickly for those quick turnaround projects.
The classic BRRRR, or just flip strategy. Got it.
Mhm.
Then they also list new construction, ground up.
Yeah, ground up construction. That's definitely a different level.
How so?
Well, it's for building from scratch, right,
Right.
from the foundation. It's interesting they finance that early stage, shows they understand development.
But probably involves a different kind of risk assessment than just to rehab.
Oh, absolutely. Different calculations, different potential rewards and risks.
Okay. So those are the shorter timelines. What about investors holding properties maybe for rental income, the long game?
Right. For that, their main thing seems to be long-term rental financing. They often mention DSCR loans.
DSCR.
Yeah,
We flag that. Debt service coverage ratio.
exactly. Basically, does the property's income cover the debt payments plus some buffer?
So the property itself has to prove it can pay the mortgage.
That's the core idea, yeah. A good DSCR shows the property can handle the loan, maybe even survive some vacancies or unexpected costs. Lenders love that cushion,
And investors too, I imagine. Breathing room.
for sure. So, yeah, with these loans, the property's ability to generate cash is really the focus. Less about your personal W 2 income, more about the asset.
Interesting shift from like a typical home mortgage.
Definitely. And they also mentioned multifamily properties, buildings with 5 or more units.
And they finance those too.
Yeah, and interestingly, they offer both short-term and long-term options for multifamily. So you could flip an apartment building or hold it for income using their financing.
Wow. Okay. So quite flexible there. Seems like they've thought about different ways people invest.
It looks that way.
Now, something else jumped out. They say their loans are often called hard money loans. What does that term usually signal in the market?
Yeah, that's a key phrase. Hard money often implies the loan is secured mainly by the hard asset, the property itself.
Rather than just credit scores.
Right. Less reliance on personal credit worthiness, more on the property's value. Often means faster approvals, maybe shorter terms, sometimes higher rates than a bank.
So speed and flexibility might be the trade-off for cost.
That's often the equation, yes. For certain deals, especially time-sensitive ones, that speed is crucial, worth the potential extra cost.
Got it. Speed versus price, a classic finance dilemma. Now, who are they lending to? The site mentions specific groups.
It says real estate professionals, commercial contractors, developers, and small business owners.
So people already active in the business.
Seems like it. They're targeting folks who do this for a living, essentially. And that fits with their emphasis on speed, closing in as few as 10 business days, they say.
10 days. That's incredibly fast for financing real estate.
It really is. And they mention common sense underwriting with in-house approvals.
Common sense underwriting. What does that suggest to you? Less rigid than a bank.
Probably. It suggests they might look at the whole picture, the deal's potential, the borrower's track record, the exit strategy, not just ticking boxes on a form. more flexibility.
which could be a huge plus for experienced investors with maybe slightly unusual but solid projects.
Exactly. Projects that might not fit neatly into a traditional bank's criteria.
Okay, moving on a bit.
Mhm.
RCN seems to really push this idea of partnerships. Like they want to be more than just a capital source.
Yeah, definitely. They seem to have a few different partnership angles. There's a broker referral program.
For brokers bringing them deals.
Right. Sounds like brokers can refer clients and get compensated. They mention different levels of involvement too, so it seems flexible.
Could be useful if you work with a broker, or maybe if you are a broker.
Potentially. Then there's correspondent lending. That sounds more
Feel-
involved.
Yeah, what's that about?
Think of it like RCN provides the capital and the back office support, the engine, for smaller lending companies.
So RCN empowers other companies to lend using RCN's money and systems.
Pretty much. It lets RCN expand their reach through these correspondents, and it lets those smaller outfits get into or grow their private lending business without needing, huge amounts of their own capital up front.
That's a clever model, like a lending franchise almost.
Sort of, yeah. It builds out their ecosystem.
Right.
And then there's the preferred vendors network.
Right. A list of trusted partners, contractors, maybe.
Exactly. Could be contractors, property managers, appraisers, who knows?
Hmm.
Access to a vetted list like that can save investors a ton of time and headache, especially if they're investing out of state or are newer to the game.
Yeah, finding reliable people is always half the battle. Okay, so beyond the money and the partnerships, RCN seems pretty invested in education too. Their resources section looks quite deep.
It really does. One thing that jumps out is the wholesale partner training platform.
Wholesale partner training, what is that?
It sounds like free online training focused on originating real estate investment loans. Basically, how to structure deals from the lender's perspective.
Free training on loan origination, that's unusual.
It is. It suggests a level of transparency. Even if you don't want to be a wholesale partner or loan originator, understanding how they think, how they underwrite, that's powerful knowledge for any investor.
It's like getting a peek behind the curtain, knowing what makes a deal attractive to the lender.
Exactly. Could help you structure your own deals better.
That's a really interesting resource. They also have a document library. Standard stuff, I guess. Loan forms.
Presumably. Makes it easy for borrowers to find the paperwork they need. Transparency again. And they have guides to real estate investing terms.
Always helpful. A built-in glossary for the jargon.
Yeah, especially if you're newer. And then there's a rehab budget builder tool.
Okay, that sounds very practical. For fix and flips.
You'd think so. Estimating rehab costs accurately is critical. Underestimate and your profit vanishes. A tool like that could help investors plan realistic budgets and analyze deals better.
Due diligence is key. Running the numbers properly.
Absolutely.
Now, glancing at their recent company news, I saw a mention of a dip in investor optimism. Spring 2025 Sentiment Index, they called it.
Ah, interesting. So they're tracking how investors are feeling about the market.
Yeah. So if optimism is down, what might that mean for someone looking to invest? Opportunity or caution?
Good question. It could mean a couple of things. Maybe a cooling market, maybe more uncertainty. For a smart investor, less optimism could mean less competition, potentially better buying opportunities.
Fewer bidding wars, maybe?
Could be, but it also signals, maybe proceed with a bit more caution, do extra homework, be conservative with your numbers because the market might be shifting.
Makes sense. Less frenzy, but more need for careful analysis. The other article was about brokers paying attention to the new construction boom. Why now?
Well, there might be strong demand for new homes, maybe driven by demographics or lack of existing inventory in some areas. For brokers, it's more potential business.
Right.
For investors, it might signal opportunities in development or financing new builds. And since RCN offers that ground up construction financing,
They're positioning themselves to ride that wave.
smart. Shows they're watching the trends.
Okay. One last detail. Lending areas.
Yeah.
They list offices in California, North Carolina, Connecticut, but they say they lend nationwide.
Yeah, that's important. Physical offices are one thing, but their actual lending footprint covers the whole US, apparently.
So location shouldn't be a barrier if you want to work with them.
Seems that way.
All right, let's try and wrap this up for our listener. The key takeaway seems to be RCN Capital is positioning itself as a go-to nationwide direct private lender.
Right. With a pretty wide range of loan products for different investment plays, short-term flips, long-term rentals, multifamily, new builds.
And they emphasize speed, that common sense underwriting, maybe more flexibility than a big bank.
Plus, a real focus on partnerships and resources. That free training platform is definitely a standout.
Yeah, that training piece is intriguing. Even if you're just borrowing, understanding the lender's side seems really valuable, like getting insider info.
Totally agree. It helps you speak their language, structure your requests effectively.
So for you, the listener, as you dig deeper into private lending with RCN or others, it seems crucial to really compare the specifics, right? The actual rates, terms, fees, eligibility for your kind of project.
Absolutely. Compare it against traditional bank options if those are available to you. See where the trade offs lie.
Which leads to maybe a final thought.
Yeah.
How much is that speed and potential flexibility from a private lender like RCN truly worth to you? How does it change your ability to jump on a deal quickly versus the potential difference in borrowing costs?
That's the core calculation, isn't it? Weighing the speed and access against the price, something definitely worth mulling over as you explore financing options.
All right, so we're back. Um, RCN, major company, man. At some point, once y'all catch on to all the game that I'm giving y'all, y'all are going to really think I'm giving y'all not just like regular, just keeping our finger on the pulse of what's going on a regular basis in the world, period. But I'm giving you major mortgage hacks. And then I'm connecting you to a pipeline of companies that if you're listening and paying attention, you can literally create generational wealth through the mortgage investment investor real estate game. You're not gonna be I'm you're not going to be able to get this information from anywhere else. No one's doing this. I promise you. I've done the research. I'm a research guy. So I've seen and looked around to find out if anybody's in this. That's why I'm in the space, because I'm like, why is nobody educating our people or people in general, not just my people, but people in general about how to get to this money. I've been in the game long enough. I've seen so many people become successful doing this, including myself, including a ton of friends. A lot of friends still haven't, though, that I talk to on a regular basis, and this is what I do. And you would think they would be at some point like, man, just show me the blueprint, because I got the blueprint. I've done this since 2008, as far as on this side of the world, but as far as mortgages, even longer than that. So yeah, RCN is definitely one of those lenders. I've done business with them. I've closed deals with them. And they are one of those ones in this industry. You got to be careful, because a lot of times people claim that they can, close on your deals, and they don't have that capital to see a deal through, get you to the closing table, walk away. It's a lot of mayhem in this business, and RCN just happens to be one that, not to say that they're perfect, but they do close loans, and that's really what's important. So reach out to RCN if you can, or better yet, reach out to me, DM me if you got further questions or you're curious about something, and you'll find out as far as what I'm saying when it comes to you having access to someone who has all the access. Squad as a kept guy, I'm a bad boy in this game. I got all the access. I know all the players. I've been doing this long enough to be deadly, which I am. So I'm not going to stuff it down your throat. I'm gonna just keep doing it this way, just gingerly feeding you. And eventually we'll build this channel. We'll build this platform up. We'll build my YouTube, channel up. We'll build the podcast up. And, we'll have an audience who understands what it is that I'm bringing to the table, right? So we're going to call it a day. That's it. For the Mortgage Mayhem, if you learned something, you laughed a little, or just got mad, hit that subscription button, share the podcast, and pull up with us again tomorrow. We're live every Monday and Tuesday from 12 p.m. to 2 Eastern Time. You don't want to miss this mayhem. I mean, like I just got through saying, we're just chopping it up for the artisans. We went a little long today. We're almost at 2 hours. It was a lot to, cover coming into a Monday. So it's pretty much Tuesday to Monday of information that I have to bring to the audience, but it's worth it. I want to keep you guys educated. I want you to know what's going on in the world, and I also want you to know what's going on in the marketplace. So that's what I'm here for. So until we meet again, I say sayonara, and I look forward to talking to you guys again tomorrow. It's the Mortgage Mayhem podcast. This is G Money. I'm out.